Welcome back to another weekly market outlook. This is for the 6th to the 10th of March 2023. Let's get started with a recap of the previous week. We have the Bank of Japan Governor Designate Ueda speaks about the monetary policy. When he goes into office, he's likely to maintain that monetary policy, which is an ultra easy monetary policy in Japan, and no changes is to be expected. Not at least until a couple of months he's on board as the new governor for Bank of Japan. So we are probably looking at a little bit of a tweak on the YCC or the yield control curve coming up from the Bank of Japan. But other than that, we're not expecting a interest rate hike or anything like that coming out from Bank of Japan anytime soon. We've got the US core durable goods order. This one here is a little bit higher at 0.7% versus forecast of 0.1%. Definitely an improvement from the previous number of negative 0.2%. Durable goods order coming in at negative 4.5%. This is slightly lower than the consensus of negative 3.7%, and a huge drop from 5.1%, which is also revised down. Then we have the Australian CPI numbers. This is 7.4%. This is down from 8.4%. Consensus was 8.1%. So we have a full percentage drop on the inflation in Australia. In terms of GDP growth, we are looking at a little bit of a drop here. 0.5%. Consensus was 0.8%. Previous one was 0.7% for the previous quarter. And then we have comments coming up from the Bank of England Governor Bailey. Really talking more about the potential for the Bank of England to kind of take a little bit of a pause in the rate hike cycle. So the current rate hike cycle, there might be a little bit of a pause, but he does warn a little bit of a potential for potentially one more hike on the current cycle. Then we have the US ISM manufacturing PMI. This was kind of expected to be the market mover. It didn't happen that way because it does came down lower than consensus, 47.7, comparing it to the previous number at 47.4. The consensus was 47.9. Market was really expecting a number higher than 48, closer to 50. We didn't get that number for the ISM manufacturing PMI from the US, so there wasn't really much of a move in the market. And then we have the CPI flash estimate for the Eurozone coming in at 8.5%. Consensus was a drop to 8.3%, so it is still a drop, but it's not that huge of a drop from 8.6% down to 8.5%. The core CPI, this one here actually increased a little bit. Previous number was revised up to 5.3%. The consensus was 5.3%. We get 5.6%. So the core CPI, the estimate, the flash CPI does come in a little bit harder than expected at 5.6%. And then we have the ISM services PMI for the US. This one here, a little bit of an improvement compared to the consensus. Consensus was 54.5. We get 55.1. The previous number was 55.2. Just a slight drop, but overall it is still above 50, and it is still above 55, which is good. Okay, so let's take a look at the numbers for this week. We don't really have much coming out on Monday. On Tuesday, we have the RBA interest rate decision. This is expected to come in at 3.6% from 3.35%, another 25 basis points hike. It's currently priced into the market. We have that rate statement, but really comments from Governor Lowe is going to be tomorrow on Wednesday. Tonight, we have the Fed Chairman Jay Powell testifying into to the Senate Banking Committee, right? We already have taken a look at the testimony that's going to be given out today. So there's actually talk of the FOMC potentially increasing their interest rate target to potentially 5.45 to 5.5%. So they didn't come up with a specific number. This is from the consensus, but they did mention that they are going to continue to hike rates. Not expecting a 50 basis points hike in this March meeting. Expecting really more of a stable 25 basis points. But the Fed does mention that they will continue to hike rates for longer, right, and maintain that rate for longer. So we're not really expecting, from the language given out from the testimony, not really expecting an interest rate cut in 2023. We're probably going to be looking at that in the first half of 2024 at the current rate. Okay. So that's for Tuesday and Wednesday. We've got the comments from Governor Low, RBA Governor Low tomorrow. We've got the ADP and NFP numbers. Not really a huge impact into the market because we are kind of expecting the official NFP numbers this week. We've got the second day of the testimony from Jay Powell. This is going to be to the housing committee. We are going to focus a little bit more on the JOLTS job openings numbers because this is kind of a precursor to whether or not we are going to get a higher NFP numbers this week, right? The previous number was 11.01 million. Expected JOLTS job openings number to come in at 10.55. If we get a number higher than 11 million, then I think we could potentially see a little bit more of a gain in the NFP this week as well. All right. Friday, we've got Governor Kuroda's, Bank of Japan Governor Kuroda's last final monetary policy meeting. So we have that monetary policy statement, and then we have the press conference, but we're not really expecting a change in terms of the interest rate in Japan. We are expecting Governor Kuroda to just maintain whatever it is right now and leave it to Ueda to take care of things. I'm not really expecting a surprise tweak on the YCC, but hey, anything could happen. That could still be there. Okay. All right. Focus would be on the GDP numbers coming out from the UK, but a real focus for the week, it's going to be the US unemployment rate, expected to remain stable at 3.4%. Remember that this number, the 3.4%, it's actually the lowest number in 41 years. In the US history, so it is a very interesting number. If we do get a move lower to 3.3%, that's going to be a huge boost to the US dollar. And the NFP numbers, previous January number was 517,000, so we do expect the February numbers to come in at 224,000. Again, the range of the consensus is basically between 200,000 to 224,000. The previous month's number was surprisingly large. We're not sure if that's likely going to be maintained, but hey, if it does came in a little bit higher than 300,000 NFP in terms of the NFP numbers, that's going to be a huge boost for the US dollar as well. All right, so let's take a look at the dollar index. So with the dollar index, just one quick little warning here. This one here, it is still range bound. It is still between 104, 105 on the index, but there was a dark cloud cover last Monday on the dollar index. Overall, it's there. That's kind of a warning sign there. But the overall tone for this one here, as long as it remains range bound between 104, 105, and if 104 holds steady, that could actually provide support for the dollar index. But again, this one here is within the Ichimoku cloud, so we do expect a little bit more of a range-bound market condition to continue throughout this week until we might get a few drivers, right? The first one would be Jay Powell testimony tonight, but other than that, it would be the NFP numbers or the employment numbers on Friday. Okay, next up, we've got the 10-year yield. 10-year yield, very, very close to a dark cloud cover as well, but it's not a dark cloud cover. We would potentially classify this more as a bearish engulfing. It is a rejection at around 4%, so we'll need to see if the 10-year yield is able to move back up above 4%. If we do see that rejection at 4%, that is actually going to send the dollar index lower as well. If it does manage to climb back up above 4%, then the dollar index might recover. It will create that base at 104. So it'll be interesting to watch and monitor the 10-year yield for the US 10-year yield. All right, so we've got that range bound condition. That's going to continue with the Aussie USD as well. With the Aussie USD, we do have that floor at 67 to 66.75 on the Aussie USD. This one here, it is still range bound, and I guess that's good that it's range bound because we kind of we could actually scale the resistance per 1 cent. So we do have that resistance at 68 cents, and then 69 cents, 70 cents, 71 cents. We've got that floor at 67. If we do break that floor on that 67, then we have 66 cents and then 65 cents. So it's more on a progressive movement on the Aussie USD, but it is really flat for the past 2 weeks. The market has been flat. We might get a little bit of a movement and extra volatility this week, and I think that's what the market needs at this point in time, because a flat market condition like this, it confuses a lot of people and it confuses a lot of traders. It makes trading a little bit harder. Okay, so with the same tone on the choppy market, range bound market condition, the Euro USD remains within the Ichimoku cloud. So this one here is not really what we kind of anticipate. We were anticipating a little bit more of a push lower towards 1.05, but we instead get a little bit of a bounce off that 105.50. This one here is very close to 107, so we would take 107 as an immediate resistance for the Euro USD. Take a look at the hidden bullish divergence here. This one here is still valid for as long as price never touched 1.05. So for a downtrend to happen on the Euro USD, it would need to break below the Ichimoku cloud, and it would also need to breach 1.05. For as long as 1.05 is not breached, then we're still looking at a more of a range bound market condition between 1.06 to 1.07. If we do break above 1.07, then it's going to be more of a painful grind to the upside, because above 1.07 we've got 1.0750 and then 1.08, and it's just really more of a grind for as long as the Euro USD stays within the Ichimoku cloud. The pound USD here, this one has transitioned out of the Ichimoku cloud, so we have this a little bit easier. The overall tone for this one here carries a little bit more of a bearish tone to it, but it is range bound. We have quite a huge range of volatility last week. It's actually about 250 pips from support at 1.1925 to resistance at about 1.2150. Pivot would still remain at 1.2, and if we take a look at the movement throughout the past few weeks, price has been going ever since the start of February. In fact, so for the whole month, price has actually been in and out of the 1.2. So that 1.2 level, counting out a few days, price has actually been touching 1.2 all the time. So we are confident that taking a look at 1.2, that's going to be the strong pivot where the market is actually going to just orbit around 1.2. In terms of support, we still have 1.19. In terms of resistance, we still have 1.2150. And we're not going to get any trend going in the market unless we break below 1.19 or price manage to close back up above 1.2150 on the pound USD. For that, this one here, as long as you're trading within the range, it should be okay, but don't expect targets outside of the range. So if you have a long position, let's say above 1.2 and you're targeting 1.23, that's not going to happen because we still have that resistance at 1.2150. Likewise, if you're going short below 1.2 and you're targeting anything lower than 1.19, that's going to be a little bit harder to do. All right. Next up is the dollar Japanese yen. This one, again, this is currently capped at 137. In terms of support, we still have strong support at 135. So the range is going to be about 2 yen, 135 to 137. And as long as you're trading within the range, then it should be okay. Do anticipate a little bit of a pullback though. If we are looking at the current state on the rejection at 137, we do anticipate a little bit of a move lower towards 135 to happen this week. But again, hey, anything can happen. We have a huge driver. The NFP number, the employment number could be a surprise. Jay Powell testimony, he could come on strongly on the hawkish side. It could be right, and that's going to send the dollar stronger. Obviously, if that's the case, then we're likely going to see that break above 137. But beyond 137, we actually need to overcome 138. So 137 is really more of a stopgap to the dollar Japanese yen. The real resistance is actually going to be located at 138. So a significant breakthrough above 138, that's going to send the dollar Japanese yen trending to the upside. Okay, something that we don't actually normally discuss about Bitcoin. Let's take a look at Bitcoin, because this was that was a huge move last week on Friday. It was a drop of nearly 1,500 in a period of 1 hour. So we actually have that break below 23,000, and price actually went through straight to 22,000. But from a technical standpoint, it's not really a surprise, because there was a class A bearish divergence. We actually got that since mid-February, and the price where it bounces off from on that drop, it's actually at 22,000. Now what's important about 22,000 is actually where the 78.6% is located. It's also a key psychological price level. It's also where the Ichimoku cloud is located. So we do actually have a lot of support at this point in time around 22,000. So it's not all bad for Bitcoin. I think from a logical standpoint, we do get a 5% discount from 23,000 to 22,000. So a lot of people are actually looking at that and say, hey, this is not a bad discount, but we still need to break through back above 23,000 before we can see any sustained rally to the upside. Until that happens, there is still that possibility if 22,000 breaks, and we could actually see a move lower towards 21,500. Below 21,500, we could actually see a move back towards 20,500. If you want to know from the fundamental side of things, then Coinbase was delisted Binance USD. Now that's the token or the coin from Binance, which is the largest cryptocurrency exchange. That BUSD was actually delisted from Coinbase due to liquidity reasons, and there's a lot of talks about what's going on with Binance and the US regulatory system, as well as them trying to acquire new licenses in Southeast Asia, especially in Singapore. So there's a lot of talk about Binance, and there's a lot of talk about how the BUSD liquidity is having an issue. That's basically what's causing that drop last week on Bitcoin. All right, so that's pretty much it for this week. Hopefully this has been helpful. Good luck for your trades, and I'll see you soon.